Hi, my name is Richard Martin and I'm the editor of the Market Forecaster. I wanted to give you a personal tour around the site. The rationale for the Forecaster came out as a result of a newsletter that I was publishing back in early 2008. I issued a dire warning about a pending move on the markets that would see the S&P 500 drop to about 660 points. As it turned out, I wasn't far wrong. The use of technical and fundamental analysis is what's embodied into this site, and I can give you a quick look at why I'm still pretty bearish about the market. Firstly, you can go in and see a bit about performance, and the site is laid out in a way that allows you to identify the types of indices, stocks, metals, and other currency trades that I've undertaken. The site is all about buy and sell recommendations. What we're doing is trying to make consistent and average profits throughout the life of our trades. These are broken up into short, medium and long terms. So if you're a superannuation investor, you can participate in the long-term trades. If you want some short-term action, then I deliver entry and exit signals on 4-hour charts, which provides plenty of fireworks. On going to the home page, you can log into the site, or first let me tell you about, there's a simple line here which gives you an update 3 times a week about what's happening in the market. I also provide an expandable chart here, and this is the ASX 200, which allows you to see the movements and a bit of an explanation why. But in truth, the real magic of the site lies behind in the members section. So let's log on. As we go into the site, you can see that there's broken up into 4 particular areas, and this is like a helicopter view which allows you to drill down into as much granular detail as you're after. Firstly, let's have a look at the world indices. The 2 indices that are loaded in at the moment are the ASX 200, and I'll give you a bit of a tour through there. 3 times a week I simply update with a bottom line comment on what the targets are and how they're likely to operate. I also provide you with a number of levels of management information which allow us to set up a trade and trigger. We enter long, and for example, on the ASX 200 at best at 4,532 points off a rising trend line to complete wave 4 and 5. I provide risk management tools such as stop losses, entry and trailing. I also strongly recommend that all trading activity only be taken on 2% of equity and 10 to 1 of margin, i.e. if you've got $10,000 in equity, that should be maximise a position of $100,000 only. Targets are set out generally using Fibonacci extensions. In the 4th section I provided background on the trades that we've actually undertaken. In this top section here you can see the primary long-term trend direction. In this case the ASX 200 is still seen as a bear market, and the short-term direction we're flat. Here we have the balance of 4,350 points, and we can look left and right to support to see what the market's likely to drop to in stages, and also in the event that it does get on a bullish foot, then what the resistance is likely, overhead resistance is likely to be, in this case at 4,500 and 4,620. Going back to the products, you can see that we can then drill down into industry sectors. These are important because I like to be able to bottom fish, and you can see here as we scroll down you can see a comparison of the materials, financials, energy, industrials against the black line, which is the ASX 200. When we're looking for opportunity, we want to know what's outperforming the average. This gives us the greatest bang for our buck, and in this case we can clearly see that industrials and financials and materials are outperforming the ASX 200. When you get to the user level, you can drill down into the stocks themselves. For example, if we want to see firstly what the industrials sector is doing, because after all it is tradable, we're able to come down and look at a weekly chart. That weekly chart gives us the overall view based on Elliott wave about the direction of the trade. and as you can see, we've had a bearish break under a 50 moving average and the possibility is that we're likely to move lower. If we want to get more granular, we can simply go down into the daily chart. This is the same indexes on the weekly, and you can see that we had tremendous support here through this section, and when it broke through in June this year, it tracked very heavily down, and on a simple head and shoulders form pattern, we were able to trade it very effectively. Since that time, it's been coming back up and looks like retesting what is now become resistance. Again, I've got entry setups, the risk management, and how to go about it. But there's more in this, and that is that you can drill down into viewing the stocks. And here are the stocks themselves. I only tend to put up the top 100. If anyone has any specific recommendations, I'm more than happy to introduce them into the platform. But at the moment, there's no recommendations on the industrials, but we're able to touch and drill down into Amcor, for example, and that will give us a weekly chart. Shows this rising trend channel that's been going on since March 2009. Of course, that's the end of the GFC, and what the likely outcome is for that. In the event that it was to break down, we'd put targets on it. In the event that it holds up, well, we will comment on that as well. So going back, all you have to do is return to products by touching on the products key, and we can move into gold and gold stocks. And here again, here's the gold indices, so the gold index I should say, and we're able to see what the primary long-term direction is, which I believe is down. We're flat at the moment because we're in a wave to upright, and the target, in fact, this is out of date because it was $1,265, which is the previous record high, or slightly below. The balance numbers together with support and resistance, and then how we're going to trade gold. This is up to date on the 13th of September, and what we're talking about is a simple gravestone doji, which was followed by a bearish day on last Friday. So this suggests that there's likely to be downside action to come, but you can simply scroll down to look at the chart to get a greater view of this. And here we have this long-term support line which comes up from late 2009 to current. This is the weekly chart. We can see the 5 Elliott wave counts, and equally the ABC, or the wave 1 to 2 downward movement that is possibly going to come. In order to see more, you just scroll into the daily, and this red line is that same longer term line here. So it shows that we've broken through this trend line just on Friday night. We're rolling over on the stochastic. We don't have a trade recommendation in place at the moment because we want to confirm this breakthrough, but you can see that once I send that out by email, that is a significant money making opportunity. Returning to products, back into gold, we can drill down into the individual gold stocks, and here we have some recommendations in play. Only two at the moment. One is Aquarius Platinum, the other is Troy Resources. If we clicked on Aquarius Platinum, you'd be able to see the weekly chart, the breakdown, the basis for entry, the entry short, the stop loss, which was initially around this $7 mark, has now been trailed down to $5.45, locking in profit, and we have a target of $3.07. We watch for what's happening on the volume, and that gives us a good indication. So as you move through the site, you can see that there's logic to it as we break down each particular area. Of course, we're in currencies at the moment, and here's the US dollar index, and we've looked at what the impact is on that in terms of the Fibonacci extensions. And as we move into the Australian dollar, you can see very clearly that the chart portrays that we're likely coming up into a ascending wedge, and that the previous high of around 94 cents or slightly thereafter is the initial target, with a pullback as we move further up. The short-term chart is actually a 240-minute or 4-hour chart, and I often give short-term trade signals off that for people to profit from. So in all, that is the site. It's fairly straightforward, but it's very user friendly. It allows you to drill down at each level, determine what area of interest you have, particularly from the stocks perspective, because we want to know where the best hunting ground is, and in all it provides a very rounded and balanced view for you to be able to track what I believe is a very sound way of establishing a roadmap in the market, that is through the use of fractals or Elliott wave and Fibonacci extensions. There's nothing else that I've found with the use of a mechanical trading system that provides such surety and returns in the market. I wish you well, and if you have any questions, please don't hesitate to contact me on info@themarketforecaster.com.au. Thank you and goodbye.